How affordable is Rutherford County real estate? That question has been on my mind a lot this week. I was fortunate enough this week they had asked me to go speak at the Middle Tennessee Association of Realtors. They had a mid-year meeting along with inviting many of the government officials in just to discuss some of the challenges with the housing market. So I was able to present to these people, and one of the things we hit on was affordability. That's been a big buzzword for quite some time now. But one of the things I want to do today is I want to look at those charts and some of the numbers that I brought to that group of people. I think you'll find it very interesting. So we will still cover a lot of things we cover normally in this weekly report, but towards the end I do want to cover that as well. So I am John Turner. I am the team lead of the Turner Victory team at Onward Real Estate. We bring you the Murfreesboro Real Estate Report every week. Not only do we cover Murfreesboro, but we cover this covers the entire Rutherford County area. So Laverne, Smyrna, Rockville, Christiana, Eagleville, Fosterville, Las Casas, anywhere else that I did not name that is in Rutherford County. So let's talk about the three things you need to know about the market this week in Rutherford County. First of all, buyers, you have more choices right now than you've had in many years, if not ever. A lot more choices. But one thing you got to recognize is this is not a fire sale. We'll get into some of the numbers here in a minute. But again, you have more choices. But right now, homes are still selling. The ones that sell quickly are still selling for 98.9% of their original list price. The second thing you need to know about the Rutherford County real estate market is affordability, at least on the affordable end. And we'll talk a little bit about that whenever we get into this affordable study, the affordability study that I did. But on the affordable end, our inventory is very thin, under 300,000. There's only 114 homes currently on the market. That'd be homes, townhomes, anything in between, which is only 7% of our market. And we have less than 2.2 months supply in that price range. The third thing you need to know about the market, there's some signals that have come out this week that we're keeping an eye on. It's not a trend right now, but as we know, mortgage rates continue to tick up because of inflation concerns, gas prices, oil prices, everything going on in the Middle East. We've been talking about this for a while. June was still a really good month with pending home sales. They were up 25.5%. So those numbers were looking great, but we've seen some things this week that have dropped off from this time last year. So we are going to keep an eye on those. We'll look at those in a little bit more detail when we get to our charts. But those are the three things that you need to know. So here's how I want it to flow today. We're going to get into our charts that we normally cover, and then just spend a little bit of time on that. Then after that, we're going to get into the slideshow and a portion of it that I used this week. And I think it's got some eye-opening information in there, so you're definitely going to want to stick around for that. Let's go ahead and switch over to our weekly snapshot. Right now, the Turner Victory Team Market Health Score is at 43. We have seen this drop. It was right around 50 just 2 or 3 weeks ago. It's dropping to 43. The further we go down from 50, the more of a buyer's market it becomes. Now, why is it doing that? One of the reasons why is the 1,629 homes that are currently on the market. It's actually slightly down from last week, but only 3 units. So we've held fairly stable, but it's up from the 1,524 we had last year. So nearly 100 more units than we had this time last year. The other thing is the 6.55 30-year rate. That does not mean it's necessarily the mortgage rate you will get. Your situation is going to be different probably. But this is higher than we've seen in a while. It keeps creeping up. With that said, it is still down 0.2 of a point from this time last year. So mortgage rates are still lower than what they were this time last year, but they have been on the rise a little bit. Whenever we look at the different price brackets, Remember, the light blue is the percentage of new construction that makes this up. We have 1,429 available homes right now. Most of those are in the 400 to 500 price range. Most of them are. So keep that in mind if you are in that range. We do have decent amounts on either side of that in the 3 to 400 and the 5 to 600 as well. But with that said, 35% of those are new construction. Once it's over 40% and over 45% in the 500,000. It's over 40% in the 400,000s. Some of that inventory is not even built yet. It's just put out there because the builders are drawing you into their model home. You can look at the different plans they have, and they can build a plan for you. So the new construction does skew that number just a little bit. Below 500,000, we're still in the green, so the market's still moving, but there is definitely a huge difference between above 400 and below 400. Anything from 500 and above, we are in a balanced market. All right, so let's look at what's going on with our charts here. We talked about inventory. Inventory is up. It's actually, like I say, down 3 units from last week, but basically up. We're at the highest points we've seen. We go back 4 years on this, but it may be actually the highest points we've seen. I don't know. I'd have to go back and check during the Great Recession to see if we had higher inventory levels at that point. Traditionally, we have kind of see it level off through here. If we do like we did last year, we may still rise a little bit up until we get into September or October, and then start dropping off for the fourth quarter. Month supply, we've talked about this. Even though our inventory is up, our pendings and closed sales have been up this year. So the month supply is actually dropping. It was 3.52. Last year at this time it was 3.4. So we're very close to where we were last year, unlike the gap we saw between the 2 years earlier this year. One of the things I said we need to keep an eye on, we've been watching new listings all year. New listings are down quite a bit this week. They were the past 3 weeks. I don't know what that tells us right now, but we're starting to see a trend there. It's actually really, if you look at the past 4 weeks, we've been below last year and the year before. So definitely want to keep an eye on that. But one of the other things, continue to watch the orange line, which is this year, the homes, the pending homes. So that was new listings. I don't know if I said that right or not. I think I did, but that was listings we were looking at. Here's pendings. We have dropped down for the first time in quite some time. We have dropped down below the past 3 years as far as pendings go. We saw this start to happen last week. It has truly happened this week. We've only had 3 weeks this year besides this where we were below the past 3 years. This one over here it's hard to believe with as hot as it is right now. That's back when the ice storm was. So really nothing happened that week. So we consider that an anomaly. So anyway, we want to keep eye on this. Are the mortgage rates and the affordability finally catching up, or is this just a week or two of off sales? And I think that's really, like I say, something important that we need to look at. The one other thing that I want to go ahead and jump down here on, sorry I have to scroll so far. We do love our charts here at Turner Victory Team. We've got almost any and every chart for you. But whenever we start looking at the showings, it's kind of interesting. Under 300,000 dropped down some this week. But if you look at our overall trend, we have seen this steady but steep decline. We are down now to about 1.5 showings per week per listing. That's all across the board. As you can tell up here, if you're above 400,000, you're really going to see a drop off on that. One interesting thing here is at the 600,000s, it is a little higher. That is something that has jumped up. But if you're looking below 500,000, the rolling average, or 500 to 600,000, the rolling average is only 0.6 showings per week. So that's where the market is right now. So So those are the signals we're going to watch. We're really looking at the new listings and the pendings because both of those were down quite a bit. So it will be interesting to see how those play out. Now let's get into some affordability things. Again, this is what I had talked about last week. Let's go back. Let's start right here. All right, there you go. So here's our mortgage rates. Back in 2000, mortgage rates were above 8%. We hear everybody talking mortgage rates, and we did get spoiled because down here in 2021, we were around 3%. A lot of people got mortgages below 3%. And then the Fed decided, hey, this market's too hot right now. We need to put the brakes on it. And you could see how quickly mortgage rates rose. There were plenty of sales back here. And the really interesting thing, even though the mortgage rates were higher, we still had good affordability. And we've got some charts that will show that to you here in a minute. But what happened was, if you take the median home price in Rutherford County now, which is $450,000. Now, back in 2000, it was, or 2020, it was lower than that. But if you take the 400,000 or 450,000 at 3%, your payment is roughly $1,897. Okay, and that's principal and interest. And these are, I'm not going to be exact on these, but they're close. Whenever you look at a 6.44% rate, which is what the rates were when I was preparing the slide deck, it goes up to over $2,800. So you jumped nearly $1,000 in house payment for the same exact money, the $450,000 loan. And that's really what we've seen. So it's created this locked-in effect where people who may want to move can't move because not if they want to keep their payment the same anyway. And this actually demonstrates it. In 2020, a buyer, if you bought a house at $450,000 or took a loan for $450,000, assuming you got a 100% loan, your house now is worth about $713,000, give or take. Okay. So you've paid down your loan a little bit. Let's say you owe $389,000 instead of the $450,000 on it. And then whenever you start thinking about the equity, you sell it, and the equity you get, you could minus expenses and everything, you end up with about $281,000. Okay, rough numbers here. If you want to keep your payment the same at that $1,897, you can only mortgage $302,000. So if you add that to your equity of $281,000, you can buy a $583,000 house. Okay? But you're selling a $713,000 house. So you would be buying a house that is $130,000 less than the one you're in now, which is okay if you're wanting to downsize. But a lot of people are wanting to move up, and they can't. It's going to cost them more each month to move up even more. And it almost always costs you more money to move up. But the way it used to be is if you were in a home, for 6 or 8, 10 years, something like that, with the equity you had, a lot of times you can move up in home and keep close to the same house payment. And we're not seeing that right now because of that big difference in mortgage rates. Okay. Now, one thing I did not cover in here, I didn't go back to the slide, but affordability, there's 3 things that make up affordability. And one of them we're talking about right now, which is mortgage rates, but also house prices and wages or household income. A couple of charts I did not show. Between 2020 and 2022, those 3 years, we had 45% increase in home values. Normally, before the pandemic in Rutherford County, we had somewhere between 4.5% to 5% appreciation every year because real estate's a really good investment. But basically what we had is we had 8 years of appreciation in 3 years, and our wages did not keep up. And we've got a chart that will show something about that here in a second. Let's talk about population real quick. Well, one thing is, if you look starting at 2017, roughly our home sales across Rutherford County have been the same, close to the same, somewhere between 550 and 5,500 and 6,000. Now, in 2020, they went up to like 6,800. So, but besides that, you look right here, pretty much the same. Last year was down a little bit. This is this year, so we won't pay much attention to that right now. We're only halfway through the year. So you're like, okay, John, well, that's not bad. The market was pretty steady. Well, it was, but you did not take into account the population. Back in 2000, Rutherford County had about 183,000 people. I think that's about how many Murfreesboro has right now, if I'm not mistaken. But it has grown up to 386,000 is the latest figures I have. But in this time frame here, from about 2017, we've gone up, 80 to 90,000 people, but the number of units sold has remained the same. And that really shows on this chart. Back in 2000, nearly 70% of all the households in Rutherford County own their home. In 2020, with the population growth and things of that nature, we dropped down to 62%. We bounced back a little bit. We're almost 65% of all households in Rutherford County own their home. But if you notice, homeownership is down 5% from 2020. We won't see that number go up, not go down. We talked about the third thing as far as affordability goes is household income. The good news is since 2000, household income has nearly doubled. It went from 47,000 up to 90,000. So the median household income in Rutherford County right now is right above 90,000, based upon the latest statistics we can get. The challenge is, since 2000, home values have gone up over 3 times as much. So income's gone up twice as much. Home values have gone up 3 times as much. And that really shows up in this chart right here. In 2005, we saw a little bit of where home prices were exceeding household incomes. But around 2012, 2013, we saw that come back together. And then 2015, they spread a little bit more apart. But as we got into the pandemic, look at this big gap right here. And that's what's really making it tough in Rutherford County from affordability. Now, with that said, there was a report that came out this week that placed Murfreesboro and Rutherford County in one of the top 10 most affordable places for first-time home buyers. So it's interesting, even though our affordability has become worse, we're still actually doing better than a lot of other parts of the country. So it's a really interesting dynamic right there. But to further bring home this point, I did a case study, and this case study is for homes in Evergreen Farms. Now, these are not the same exact homes, but they are the same floor plan, okay? And Evergreen Farms is always targeted that starter home market, that first-time home buyer. John Floyd, Ben Blake, all the guys over there, Old South, all the ladies over there, they've done a great job of actually trying to keep homes affordable so the average person in Rutherford County can buy a home. Back in 1999, you can buy their 1361 plan, I believe. You could buy that for $100,000. Now, look at this. This is interesting. The mortgage rate was 7.3%. Okay? That was normal back then. As a matter of fact, in 1999, that was kind of low. It had come down from double digits not too many years before that. Now, you take that same plan and go to 2019, that number, this house sold for $223,000. The good news is the mortgage rate was probably a little above 4%. So, a 3.5% drop in the mortgage rate. Jump forward 7 years to 2026. This one just sold this spring, I believe. Sold for $365,000 and at a rate of, 6.25 to 6.5. We use 6.44 here. So here's what that looks like. In 1999, if you would have bought that house, your monthly payment would have been approximately $800. Okay. In 2019, your payment would have been approximately $1,250. But in 2026, it's about $2,550, so about $1,350 more than what it would be in 2019. But then you say, John, I get that, and that's a huge increase, but didn't you just say that income had increased also? And you're right, I did. So let's look at this. In 1999, to buy that house, it took about 20% of the median household income of Rutherford County at that time. Okay? In 2019, it took about 22% of that. Most mortgage lenders will tell you that 28% is kind of the standard for the affordability threshold. Now, do they go above that? Things? Yeah, they do, but 28% is really kind of where they like to have that. Well, in 2026, that same floor plan at today's cost is about 34% of the median household income of Rutherford County. So that's where we're getting into some of the affordability issues. How far are we off on affordability? Well, the median household income at $90,000 means that really the maximum price that you can afford comfortably. Okay, now people have been pushing this because of the affordability thing, but comfortably is about $310,000. Well, the median sales price in Rutherford County for June is $450,000. So what the median household income can afford versus the median sales price in Rutherford County is off by $140,000. Okay? We can look at another way. How much income does it take to afford the median house price in Rutherford County? Well, the median household income with today's interest rates and trying to keep everything at 28%, you need a household income of $142,000. And right now, the median household income is about $90,000. So we're about $52,000 off as far as the affordability goes on that. And that, looking at that study, I mean, we hear affordability all the time, but that study and pulling some of those stats really put some things in perspective for me. Now, what are the answers? I will tell you this. It was interesting that some of your government officials who were there were very interested in these numbers, and it was very eye-opening. Some were asking or saying, well, what can we do? We can't do anything about mortgage rates. Some were asking genuine questions like, how can we do this? How can we help make things more affordable for the average citizen of Rutherford County? And I appreciate those officials who were looking at it that way and trying to figure that out. Hopefully, if nothing else, we've opened their eyes a little bit more to what's going on in the county on affordability. With that said, there's still a lot of things selling, and not every person is made to be a homeowner. That may not be a popular thing to say, but it's just homeownership is not for everybody. And some people are not responsible enough. Some people don't want to be homeowners. So we're never going to reach 100% or anything of that nature. But what I do want to see is this generation coming up of people growing up in Murfreesboro and Smyrna and Laverne and Eagleville. I want them to be able to afford a home here. I want them to be able to continue to live in this community. We've seen a lot of migration out towards Cannon County, Coffee County, Bedford County, because it's more affordable for people there. And most of the time we hear people say, I would prefer to stay in Rutherford County, but it's just not affordable for me too. So anyway, I've got some ideas on it. I'm not going to share them with you today, but I did at least want to bring that affordability up to you and put it in a little bit more perspective, just because it was timely. And it's something, like I say, I had a chance to speak to some people about this week. So with that said, it has become a little bit more affordable for you if you're a buyer. That's the first thing we talked about this week, because with more inventory comes more downward pressure on prices for sellers. And even though it may not show up in the sales price, sometimes in concessions, it helps you. The second thing, the affordability end is thin. Anything below 400,000, we do not have a whole big amount of supply. And one of the slides I did not show you is we don't have a lot of new construction inventory helping ease the inventory issues there below 400,000. The third thing to watch is we've got a couple of leading signals here that may indicate that the market is slowing down more than what we would see the traditional slowdown at the end of the summer. Those are things that we're going to watch over the next couple of weeks to see whether those come to fruition or not. I appreciate you tuning in. I'm John Turner. I'm the team lead with the Turner Victory team at Onward Real Estate. If you have any real estate needs, please reach out to myself or to my team. I've said this many times. We've got a great team, and over half our team's been with us for over a decade, and we're very proud of that. But they're very good and knowledgeable agents, and they can certainly help you. So please feel free to reach out to us. Thanks again for tuning in this week. We bring this to you every week, but until next week, we hope you make it a great week. Thank you very much.